And welcome to the VSA Capital Tech and Transitional Energy Podcast on Thursday, the 19th of June. Hi, Phil. How are you?
Very good, thank you, Andrew.
Good. Now, are America going to attack Iran or not? What do you reckon?
Well, they're building up to it. That's for sure. But I guess it's taking them time to put everything in place. I was reading that. I mean, we've got Lakenheath Air Force Base near us. That apparently jets have gone from there over to Qatar, US Air Force jets. So yes, let's see. And the oil price is staying up where it is.
It's a very uncertain world out there, isn't it? It's sort of all change. It's scary, wary. So it's not easy to make money. But I'll tell you, just out of interest, one stock that obviously we do talk about an awful lot, but it's been running very strongly this week again. It's actually had a pretty good month, I suppose, and that's Invinity Energy Systems. I mean, it was funny, at 8p, no one seemed to want to touch it. Now it's gone over 20p. Everybody seems to want to buy it, but that's stock markets for you, isn't it, Phil?
Yeah, we would.
The Indians. Yeah, that's right. The Indians have been increasing their stake. And also, it is next week the International Flow Battery Forum, which is a big sort of conference for flow battery companies. The whole world goes to it. It's in Vienna this year. I won't be attending because I think Cornwall is more appealing. But, I think that could be a pretty important meeting, to be honest with you. And we brought the National Wealth Fund in and did that fundraise actually just over a year ago now. We raised 56 million for the company at 23p. So that's quite a level that we're looking to smash through. So fingers crossed. Quite a few people actually writing into us at the moment, talking about it. So we will try and keep you all as informed as we can. We're all still somewhat waiting for the company to be able to say how well they've done in the bids for the cap and floor, and that will be quite interesting, I think. Elsewhere, what were you? I'm slightly out of the market at the moment because I am down in Cornwall. What sort of general points have you got, Phil?
Well, it's not just in terms of company announcements; they're pretty thin on the ground. I'll get to a couple of those, but something that caught my eye this week is obviously regarding the tech sector. The whole subject of AI is a very vast one with lots of capital going in. But for us involved in transitional energy in particular and mining, there's some interesting news on the sort of more on the nuclear front. And this was a report in the Telegraph that Westinghouse is in direct talks now with Downing Street regarding potentially building a nuclear power plant off the coast of Wales. So this will be at the Wylfa, can't pronounce it, so I'll be corrected by some Watch people, I'm sure, but it's Wylfa on Anglesey, Wylfa site where there's already a nuclear plant that's being decommissioned. So Westinghouse is looking at that in terms of a long-term reactor technology coming in. But also I saw an article in the FT this week, and this was regarding funding in the US for SMRs, small modular reactors, and it's TerraPower. It's a private company founded by Bill Gates on Wednesday, announcing that it raised $650 million from investors, including the venture arm of Nvidia. And of course, nuclear power is required now because of the energy being consumed by AI on the grid, and obviously Nvidia a big player in there. But also Oklo, raised $460 million again in the US. And last week on the podcast, one we missed was that the UK government has announced that Rolls-Royce is going to be a preferred partner for SMR development in the UK. And of course, Rolls-Royce has a long history of SMRs for the submarine fleets. So a lot of increasing activity there on the nuclear front. Also, just in terms
I thought you were fluent in Welsh.
I lived in Cardiff, and it's fantastic. And I was down in South Wales last year, and I love the country. So there anyway.
You go. Look, nuclear is quite interesting. We talk about it quite a lot on our mining podcast, the 5 Minute Morning Miner, because I've been quite bearish on the uranium price, and being right. there's an awful lot of stale bulls out there on uranium, but I do think I'm going to have to start to change my tune possibly, because I do think that certainly SMRs are likely to take off. It's although I'm a massive fan of SWB, solar wind batteries, there is place for SMRs, and there is actually still place for gas, to be honest with you. So anyway, also just as we were started this podcast, Phil, worth mentioning, the Bank of England has held interest rates at 4.25%. Said that they're likely to come down a bit more during the rest of the year, but that the underlying growth in the economy was very weak, and the world is highly unpredictable. He's good, that Andrew Bailey, isn't he? Really knows what's going on.
Reading the
And so
news.
he's not to rush down too much, but he may have to lower them just to sort of try and kickstart the whole bloody economy. So yeah, but interest rates unchanged.
Well, there we go.
Disappointed for people, and of course Trump is still trying to get the Fed and Mr. Powell to reduce his interest rates. I mean, the reason government wants interest rates lower, I'm sure everybody is aware of that, is of course then they have to pay less interest on their debt, which makes it easier to run the economy. But you can't force a central banker to reduce interest rates when you've given him independence, can you?
No, clearly not happening. And let's see what happens with the oil price as well, Andrew, because that will certainly have a bearing on economic performance. But I was just, on the subject of nuclear, I was just going to say, just in terms of investing, is like how you get exposure more to the sort of technology area. I realise, we've covered the podcast before ETFs. I mean, David doesn't particularly when he's on looks at ETFs, but the Van Eck have got a ETF, the Uranium and Nuclear Technologies ETF. There we are, and it has 15% holding in Cameco Corporation, which sure you know, Andrew, and they've got. I didn't realise they got a 49% interest in Westinghouse. We mentioned from the start. Also has a holding in Okla, we talked about, and Next Gen Energy. So that was. That's quite interesting.
It sounds like a good ETF, Phil, but it's taking out all these ETFs. They take out as a job. We're trying to, look at individual companies. Anyway, there you go. Don't get me going on that one either. All right.
No, and I mentioned Rolls Royce anyway. Right. Anyway, moving on swiftly to an individual company for you here, Andrew. The Gore Street Energy Storage Fund. GSF is the ticker. Yep. The shares are up by 26% in 6 months, and its discount to NAV. I mean, it's been something a really steep discount, but that's come back. It was a discount of 55% to its NAV, and that's pulled up, and it's up to 40% of NAV now. But they announced it's interesting what's happening with Gore Street. They announced in February that it reached a milestone of 753 megawatts of capacity installed, and it's broadly across the UK and in the US. They said they'd energised a Big Rock asset in California, which was a 200 megawatt, 400 megawatt hour asset, and that because of its assets in the US, it's subject to investment tax credits on these assets. And so file to receive those tax credits. What they've announced this week is following shareholder consultation and roadshow that they're going to reduce their management fees, firstly on the fund itself, to 1% of the NAV. They also announced a special dividend of 3p, and this is in relation to the sale of those investment tax credits on that US project. So a special dividend there. They've said that they're going to link their dividend distribution to operational cash flow, which is always good to see. And then just further to that, so they're undertaking a strategic, looking at midterm strategy options, and they've appointed an advisor for that. So quite a bit happening there for Gore Street Energy Fund.
Yeah, again, it's quite interesting, isn't it? That was another one. All those energy funds got absolutely bombed out about a year ago, didn't they? No one wanted to touch them. Yeah. Of course, then they all started to rally. It is. When everyone's a bear, it's the time to buy them. When everyone's a bull, it's time to sell. That saying lasts forever.
Yeah, it's it does, isn't it? It's oh so true. And if you think a company's got a very strong brand, good assets, the market's structurally growing, not going away, then yeah. But investor psychology, eh? I mean, these shares bottomed in December, and that was just at the time there was a lot of news flow coming out in sort of October, November about the UK control centre. The grid central control centre skipping batteries on the grid and not firing them in, so which lowered the revenue for funds like Gore Street. And of course, they've been working at the control centre now. It's now run by the government to correct that. So there we go. So there was one company for you. Another one is Oxford Instruments. OXIG is the ticker, one we discussed previously on the podcast. Very long listed company, this one. It's a billion market cap now. The shares are down 34% over 12 months, and they reported their full year to March. The company's been around for an awful long time. It exports internationally as well as domestically. It specialises in imaging systems for scientific discovery, processing systems for semiconductors, and also has superconducting magnet technology. And I know that that's going to infusion reactor developments. Just in terms of their full year results, revenues were up by 6.4% to just over 500 million, driven by the semiconductor industry and also material analysis, because it has things like scanning electron microscope tools where you can look at new materials and develop those. So those areas very good, but as we've discussed on many an occasion on this podcast, healthcare and life sciences spend weaker. They said that pre-tax profits declined to 44%, but there were one-offs in there, particularly on things like impairment, restructuring charges. So adjusted operating profit was up by 2%. And order books just up by 1% to £460 million. So reasonably bullish statement, but not a tremendous amount happening in that share price right now. They also said they're going to return £50 million to shareholders, or £50 to £60 million through the sale of Oxford Instruments Nanoscience. So no, it's 50 million returned, and the sale was valued at 60 million, just to correct that. So there we go. That was Oxford Instruments.
Very good. Well done.
And Andrew, I said to you there wasn't much news. There's not been a lot. Come on, have I missed anything, Andrew?
Well, as I say, I haven't really been around too much, so I'm not the best person to talk to this week. I need to do a little bit more swatting up on what's going on. No, look, I think news has been pretty slim. There's a few deals whizzing around the city, but the city's starting to go, you know what, it's the summer, the sun's shining, time to get out. So a few people are trying to close them off. But I suspect it will be, we're going to get a bit quieter for the summer. So I'll tell you what, we'll call this a very short podcast. We'll call it Short TNT and call it a day there in under 15 minutes. That's probably a record, Phil.
We'll check again next week.
No, I would just say, if anybody wants to send us a pint at Carlsberg, please do. Anybody want us to talk about anything in particular, then please do. And if anybody disagrees with anything we say, please do. Anybody wants to sponsor us, please say. And on that note, yeah, we'll reconvene next week, as they say, Phil.
We will. Chat again next week, Andrew.
All right.
This podcast has been produced and edited by VSA Capital. It is intended for information purposes and not as investment advice. The information is intended for recipients who understand the risks associated with equity investments in smaller companies. Please do your own research and do not rely on a single source when making an investment decision. VSA Capital may derive fees from this content and seeks to do business with the companies mentioned.